Hello, my dear friends. So it's about my thought. I'll explain few things and then I'll leave you to post few comments as a feedback because this is something triggering to you at the end. So because which is troubling me and just thought put that thought into a kind of video and tell the that thought. So I have like noted down three questions here. So let me take this first at last. So this is the comparison between the MRF and the REC Limited. So both are from different sectors. Like MRF is into manufacturing of tires, and REC Limited is the PSU stock, which is into finance into the rural electrification, whichever comes for like energy sector with respect to energy sector. So the question number two, okay, before that, like what I did, I picked the stock in the year of 2008. So I'll tell you why I picked 2008. Before that, so the price, the lowest price, I picked the lowest price in the entire year of 2008. In that entire year, whatever the low price it was available, I took that as a hypothetical case. So REC Limited was at 7.5 rupees and MRF was at 1533 rupees. So this is something I have captured the screenshot for your reference. If you see, the low price was 7.5 for for REC, and then for okay for MRF, if you see, for MRF, it was around 1533.6 paise. Okay. So I didn't take that 60 paise, but it's okay, like 1533. So if you had invested 1 lakh rupee, right, it's all about hypothetical cases. So if you had invested 1 lakh rupee, then these are the quantities you would have got. Okay. For REC Limited, you would have got around 13,333, and here it was yeah, for MRF it was around 65. Okay, so I just made it round because we can't buy a decimal stocks now. Maybe the like I think thought is going on to make it a fractional buying, but I don't know. Till now we have to buy in one quantity, minimum quantity. So this is the current market price. Okay, we know REC Limited did really well in last 2 years. Now it is at 531 rupees, and MRF is around 1,25,000 plus. So to buy one stock, we have to give 1,25,431 rupees. So that's the current market price. And today's valuation, if you see, so REC Limited, okay, that 1 lakh would have become around 70 lakh today. Same thing for MRF, it will be around 81 lakh 82,000. So the question number two, okay, in terms of today's valuation, yes, MRF uh, is giving close to like 12 lakh extra compared to RS Limited. Okay, with respect to the capital appreciation, MRF is giving a really good return compared to REC Limited. Okay, so coming to the question number three, okay, this was my main triggering point about the dividends. So I always focus on my portfolio after some time. It should give us a decent dividend. Okay, I'll tell you at the last why it should give us a dividend. Okay, why just not capital appreciation? So coming to that question number three, okay, this is the answer. So I just captured the information only for last 6 years. Not I didn't go from the like 28. So I just captured from 17, 18 till 22. If you see the trend, right? Like REC was giving like 6 rupees, 8 rupees, 9, 11, 12, that like that per annum. Okay, this is the rupees per share. MRF was giving around 60 rupees and recently it gave 175. Okay, this is for one stock. We know we had bought these many with 1 lakh, and now see the total dividends we get from REC and MRF. If you see for 17, it was 91,000 for REC Limited, and for MRF, it was close to 4,000. If you see the trend, okay, REC is giving like more than 1 lakh, kind of consistent dividend yield. So here it was giving like 4,000 and it came around 6.5, and recently it was 11,000. So when we compare the dividend yields or dividends from both the stocks, definitely REC is giving really nice dividends compared to MRF. So my question, right? So whenever we build a portfolio, it is really good because see, imagine we all come to market with a good mindset to put our money maybe at the age of 23, 24, 25, whatever it is, uh, and we invest say for 25 years or so. When we cross 50, 55, so what matters to a common man is the regular income rather than having a portfolio of say 5 crore, 10 crore. But if that 5 to 10 crore portfolio is not giving us a regular income, then will we sell that and convert that to annuity plan? So that is something we have to think. If somebody converts that, he sells his portfolio and he gets that 5 to 10 crore and put into some annuity plan, and if he gets a consistent regular income, then that's good. But there is a psychology, right? We don't end up selling our big portfolio because there is like some emotionally we will be attached to that big portfolio. So for those people, so such dividends won't help, right? But dividends from stocks like REC Limited, that helps us a lot. So that was my thought process. If you ask me, I go with a good stock, even with a capital appreciation, that should give a good dividend yield per annum. Okay, coming back to the question one, why I picked 2008? As I said, it is my thoughts. Okay, this is like I have created a playlist called stock market and my thoughts. So this is the first thought I'm like no telling you. Why I picked 2008? Because I did my engineering in 2007 and passed out in 2007. 2008 was the time when I could have started my investing journey. Unfortunately, I did not do. I started little late, just before COVID. I was like studying, and then during COVID, I had got a very good opportunity. I started my investing journey from the COVID, just before 1 or 2 years before that. So that was the reason I picked this year and date. So if you have any questions on the anything about these numbers or any kind of critics or any positive feedbacks, please leave that in comment. I try to read all the comments and try to make some kind of videos if it feels, if I feel okay, this is something I can make a video on this comment so that it will help me and you. Okay. Thank you for watching. Have a great day.